Hello, I'm Adam Grimes with MarketLifeTrading.com, and I want to start the week here. So this is being recorded for Monday, June 16th, 2019. I want to think about how we trade the market as swing traders ahead of the FOMC. And the way to think about the FOMC is it's similar to earnings, but for the broad market, meaning that it is essentially unpredictable direction-wise. Now, you can try, and I've seen over the years, and I've made over the years, different Fed models that both, there's two ways you can work with this. You can try to predict what the Fed will do, but what really matters is the market reaction. And so you can try to predict how the market will react to whatever the Fed does. Both of those things are quite difficult. The thing that I've come to believe over the years you can really count on is there's probably going to be some volatility. And the flip side of that coin is that before the Fed, so we're talking Monday a little bit, but especially Tuesday, and even more so the first half of the day Wednesday. So the FOMC announcement is at 2 o'clock in the afternoon, 1400 New York time, and when that report comes out, the market will usually move, and a lot of times we'll continue to kind of have some wide swings into the close. However, before that, we'd usually kind of see the market stuck and not really going anywhere. So it's a difficult week to be a swing trader, and it's a week that invites a lot of mistakes. Now, that's a more useful statement than it seems like, right? How do you avoid those mistakes? Well, the mistakes that we can make are coming into the Fed with very heavy exposure. Now, I'm not saying that you don't have anything on, you don't trade at all, you get flat before the Fed. It's one possibility. I'm not saying that you sit on your hands and do nothing, but you do want your risk under control. So whatever you would consider to be kind of full risk, you come in with less than that. What's less than that? Well, what are you comfortable with? How big do you think the market's going to move? But, half maybe is one possibility. 25, 75. I think it's really splitting hairs to say, 75 or 80. It's kind of the same thing, but do you want to be really light or do you just want to be a little bit light? Only you can answer that, but this is the type of event that they happen with some regularity, and it has to be part of your trading plan, how to position for those and how to think about those. I'll give you one stock too. So here's the stock that we're looking at. Potential breakout here in Honeywell. Now this is already, excuse me, it's already a stock that's run a lot, right? If you look, let's just say you've had this run up and then you had a complex consolidation and you're swinging up here and consolidating under the highs. So what this really is some variation, let me draw that a little bit better, some variation of a cup and handle, right? Where you have some type of breakout level here, and typically this sets up a pretty good breakout. So this is a stock that we don't have a position in, but we will very likely look to do something on strength. One thing you do need to be aware of is it's not a stock that swings a lot. So you're going to have a lot of very quiet days, and you need to be prepared for that. For some people, it's a little frustrating to buy a $150 stock and then to discover that it moves an average a point or two a day. Certainly capable of moving more, right? We can point out some big news-driven spikes, but this is working toward a pretty good breakout level. And last, let's just kind of flip back and look at the broad market. So I do think that everything we see here in the market is objectively pretty bullish to maybe extremely bullish. And what do we see? Well, so there's this bull flag, which I would define, I won't get the lines exactly right, but something like that. Well, try again, right? This is the boundary of the bull flag, and the flag itself is a two-leg consolidation. We broke into the upside, and then what happens? Well, then we have a little bit of a pause, and there's a very high probability that we're right here, that this is a pause leading to more upside. It's what I've called a nested flag. All-time highs are just overhead. We'll have to watch market action around those, but very good chance that we do at least touch, if not exceed, all-time highs in the S&P. So I think everything we see technically and fundamentally, and I won't run through the whole list fundamentally, but there are a lot of things that people are worried about, and there's nothing that really raises any serious concern. We see some very early warning signs, but there are always early warning signs, and you have to focus on the weight of evidence, which in this case points to the upside for both short-term traders and longer-term traders. Okay, that's all we have here to start the week. I'll see you back for another free video after Monday's close. If you want to see more of my work, marketlifetrading.com. You can also check out my blog, adamhgrimes.com, and follow me on Twitter at AdamHGrimes. Thank you very much.